Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial secrets that companies try to hide in plain sight, and today we're diving into what News Corporation has been up to. It is not a huge shocker, but sometimes the smallest filings can tell us a lot about a company's strategy, and this one is all about them buying back their own stock. So we're looking at a report filed on the 16th of December 2025. Now, News Corporation, or NWSA and NWS on the stock market, is a huge media company. You know, they own Fox News, the Wall Street Journal, the Sunday in the UK, and a bunch of other stuff. What this filing is really about is something they call stock repurchase programs. Think of it like a company deciding to buy its own shares back from the public market. They're authorized to spend up to $1 billion on this. So why would they do that? Well, when a company buys back its own stock, it can signal a few things. It might mean they think their stock is undervalued, or it could be a way to return cash to shareholders without directly paying dividends, which can sometimes be taxed differently. It also reduces the number of shares outstanding, which can boost earnings per S-Hare metrics. This report specifically flags that they are repurchasing both their Class A and Class B common stock. These are just different types of shares a company can have with different voting rights or other features. The key takeaway here is that for some reason they are actively reducing the total number of shares floating around. Because News Corporation is listed on the Australian Securities Exchange as well, they have to, by their rules, report every day if they bought any shares back. This report just bundles up that information. It is like a daily log of their stock buyback activity. They also mention that they put this information in their regular quarterly and annual reports. So this isn't completely new if you've been following them closely. The filing also includes a standard disclaimer about forward-looking statements. This is basically a legal heads up that anything they say about their future intentions, like repurchasing stock, might not actually happen the way they expect. The real world can throw curveballs, like stock prices changing, general market conditions shifting, or new laws impacting their ability to buy back stock. They're saying, don't hold us to these future predictions because things can change. They also explicitly state they are not obligated to update these forward-looking statements if circumstances change, which is pretty common in these filings. And then we have Exhibit 99.2, which is more of that information provided to the Australian Exchange. It is more data from their daily disclosures. You won't find a bunch of juicy financial numbers right here, like profit and loss statements. This filing is more about the mechanical process of them executing their buyback plan, rather than a deep dive into their financial health. Finally, we have the interactive data file, which is basically a digital format for the report that computers can read. It is important for regulatory compliance and for those who want to analyze the data programmatically. Now, let's step back and think about what this tells us. News Corporation is signaling a confidence in its path forward, enough to spend significant capital on repurchasing its own shares. This isn't unusual for large, established companies that might not have many other high-return investment opportunities lined up or are looking to manage their stock price. The sheer scale of the authorization, up to $1 billion, suggests they have substantial cash reserves or a strong view on their future cash flows. From a Warren Buffett perspective, you'd want to know if this buyback is truly creating value or just shuffling cash around. Are they buying back shares at a discount to their intrinsic value? With media companies, it's always a balancing act. They operate in a rapidly changing digital landscape. While traditional revenue streams might be stable, growth areas require constant investment and adaptation. Buying back stock can boost EPS, making the company look more profitable on paper. But the real question is whether that money could have been better spent on innovation, acquisitions, or simply being held for a rainy day. Looking at the News Corporation's overall strategy, this buyback program suggests a mature company focused on shareholder returns and potentially managing its stock performance. It signals a lack of urgent, massive new growth initiatives that would soak up $1 billion. We know they are a diversified media giant, but the media landscape itself is a tough one. Digital disruption, changing advertising models, and evolving consumer habits are constant challenges. So while this buyback is a positive signal of financial health and confidence, investors should keep an eye on how they navigate these broader industry headwinds. Are they investing enough in future content and platforms, or are they primarily focused on financial engineering? In conclusion, this filing is less about a dramatic financial reveal and more about News Corporation's ongoing strategy to manage its capital and shareholder value through stock repurchases. It's a sign of financial strength, but it also prompts questions about strategic investment priorities in a dynamic media environment. All right? That is our breakdown of News Corporation's latest filing. What is your take on these buyback programs? Do you think it is a sign of strength or a missed opportunity for investment? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.